We've got some earnings to dive into. We just had Qualcomm's numbers hit the tape. Adjusted EPS $3.41 a share, revenue of nearly $11.7 billion. Both of those better than expected. Scott, let's get your take first on these numbers, especially in the context of the expectations for the tech sector.
Yeah, and this is right in line with kind of what I was talking about, so we're seeing some up, some down, and this is obviously a good report in terms of the numbers for Qualcomm. However, I'm interested to hold out and see what kind of guidance we're going to get, because, what we're really seeing with Qualcomm is they're right in the middle of transitioning from reliance on smartphone chips, moving more into automotive and the Internet of Things types of sectors. And so, we'll see how they go. I'm anxious to see if they can maintain this trajectory. I think they can, but we do have a few things that they're running up against. They've got the market competition, which is intensifying like crazy for these guys. They've got regulatory challenges, ongoing legal disputes, and regulatory scrutiny could really impact operations and financial performance of Qualcomm over time. Good report today. We'll see how the market reacts to it tomorrow.
Yeah, George, Scott just mentioned wanting to see guidance. We just it's like second by second, minute by minute as we get these headlines. They're guiding for Q2 EPS of a range for 270 to 290 on non-GAAP revenue of 10.2 to 11 billion, GAAP revenue of 10.3 to 11.2 billion. What do you make of these results, George?
I mean, overall, pretty positive. I think the market's taking some time to digest Qualcomm. Just from my historical, observation of Qualcomm, it takes a while for this stock to ramp up in earnings and the way it trades. But overall, if you look at the Q2 guidance, like you said, you mentioned 270 to 290, so the midpoint 280 versus 269. Obviously, that's an improvement. Sales midpoint estimates 10.3. They came in midpoint now. It looks like between 10.2 and 11. So if my math serves me correct, that's about 10.6. So that's about a $300 million increase at the midpoint on sales. And of course, looking at adjusted EPS, an increase by about 11 cents. So those are two positive attributes to Qualcomm. As you can see, it's starting to pick up a little traction here in the after hours. And I think there's probably some element to China and Apple. We have to consider Qualcomm. It has a lot of exposure to Apple. About 20% of their sales are in that space. But there's also been some, rumors about China providing some subsidies to consumers for mobile handsets, and that includes, of course, companies that may benefit, which is Qualcomm. So that might be one of the reasons why they're seeing a pickup in the estimates for EPS and sales, and then also the languishing area of the business, the CPU and the automotive chip space has been slow and sluggish over the last year. So maybe there's some guidance pickup in those two areas of their ecosystem.
Yeah, I think the earnings call is going to matter a lot, and I'm sure that we'll get some questions about guidance there, and possibly we'll potentially see some resetting of price targets. Analysts are largely bullish to neutral on this one. You've got nearly 24 buy ratings and 18 in the hold camp on this. We just got results from ARM as well, so I know the stock ran up ahead of its earnings today. Adjusted EPS coming in at 39 cents a share. Sales, 983 million. Looks like another double beat there. Scott, let's get your reaction first to this for ARM. How much is riding on this one?
Quite a bit, actually. This is, when we take a look at ARM, if we focus on their key focus areas, which is AI, data center applications, what we really want to see and what we are seeing is investors that are monitoring advancements in processor architectures, especially around AI and data centers. Again, I want to hear what they have to say about their growth and their expansion in those arenas. But again, we're seeing some really good numbers here on ARM. We'll see how the market reacts to it. Now, we do need to remember, too, that they've got a couple of important strategic partnerships. One is collaborations with major tech firms, and these are crucial with market reach and influence. And so as ARM continues down that road, this is one of the things that I'm going to be listening to see if they're still focusing on that, to see how these things are working out. Now, also we do have some legal developments between ARM and Qualcomm, believe it or not, over a breach of contract and trademark infringement. A federal jury ruled in favor of Qualcomm just last December, and so apparently not affecting ARM and their reports as of yet. Whether it will in the future or not, still yet to be seen. But good report today for ARM.
Yeah, look, they're beating on the top and bottom line. It looks like a little bit of pressure in the after hours. I can't quite put my finger on what we're missing here. George, your initial take on these results?
Well, obviously, I mean, the headlines posted some nice returns. I mean, about 34% EPS growth year over year on 19% sales growth, beating both the top and bottom line. Generally speaking, when you have earnings growth about 1.5 to 2 times sales growth in terms of rate of change, you see strong trends. I think that the underlying challenge for ARM, and this is maybe why we're seeing some give back in the after hours, is essentially the hardware component of their business. If DeepSeek creates some challenges for the hardware companies, ARM Holdings, and also, of course, companies like NVIDIA, that might present a challenge to them. Qualcomm also, by the way, is a hardware company, but they typically don't compete in the same data center and GPU realm like ARM Holdings. So what I'm trying to say here is that they're a little bit more at risk, I suggest, based on some less expensive ways of deploying AI. In other words, what DeepSeek has shown to do so, generating higher yield on lower CapEx. So ARM may not necessarily or be benefiting from higher CapEx. I think lastly, too, valuation, just going into these reports, or this report this afternoon, just based on fiscal year 2025's earnings as they were at $1.56, is trading at around 103 times 2025's earnings. So as a hardware company, which again generates about 60% of their revenues from licensing, that valuation is a little bit rich, and I think that's why they're selling it off just marginally in the after hours.
That's a great point. The valuation is rich, and so can it sustain where it is now? And in terms of the future path for that, I think we'll also want to listen to the earnings call for that and to see what more details we can get on the guidance and any potential impact, even from DeepSeek, what it means for them, and especially given that they're really like a big part of their business is licensing. We've got some other earnings to get into. We've got Ford's numbers just out as well. Adjusted EPS 29 cents a share for Ford. That missed expectations. This is another quarter where they're just having those challenges. Sales $48.2 billion. That did beat. That looks like, that beat estimates for revenue. Scott, let's talk a little bit about these results from Ford. I'm sorry, correction. Adjusted EPS was actually 39 cents a share. So that did actually beat estimates. Sorry, there's a correction there. And we're getting these fast and furious headlines. So again, adjusted EPS 39 cents a share. The expectation 33 cents a share. Revenue 48.2 billion. Your initial take on this? It looks like there's some worries a little bit about guidance from Ford. Not surprised to see that. But what's your take, Scott?
Yeah, not one bit surprised. I mean, guidance is an area with Ford that is really going to be extremely important throughout the entirety of this year, because investors are really wanting to see improvements in quality control and reductions in warranty expenses. Ford's had higher than expected costs in previous quarters based on warranty expenses, et cetera. The other thing is they've been under a lot of scrutiny here too. Performance of Ford's electric vehicle division, big time scrutiny, especially given quarterly losses in the past of over 1.3 billion. So I want to see how that pulls through in this quarter as well. Again, more regulatory scrutiny when it comes to Ford. They've faced recent penalties, including a $165 million fine for delayed recall. else, highlighting ongoing challenges in compliance and quality assurance. Ford's got some work to do. It seems like there's some internal strife happening here. There's some things that need to be lined out and ironed out in order for them to really be competitive. Now, we saw GM take a little bit of a hit earlier, too, so I don't know if this is more of a sector thing or if it's directly related to Ford, but Ford's got some work to do. It's an uphill battle for them, in my opinion, right now.
I think there's a little bit of challenges to both because one of the issues with GM off the back of their earnings was it was related to their guidance, but kind of different reasons, because there was a question that was asked on their earnings call was, did they take into account the tariffs with regard to their guide? And at that time, the tariffs didn't exist yet, and they essentially said no, they hadn't taken to that account. So you saw that stock get hit. Ford, as a result, got hit as well as a result of that. So I think there's at least one similarity in terms of that being about guidance, but the guidance for Ford seems unique because one of the things that they just said, George, that I'm seeing is in terms of their guidance, their profits will be, quote, marred or hit essentially by, quote, headwinds related to market factors. George, what's your take on these results from Ford?
Well, I mean, it's kind of a long story with Ford, so I'll try to be brief here. But I'm just going to say, if you just look at the last 3 years, the stock has been stuck in a range between like $9 and $14. So that's already telling. I think one of the things I'll tell you is, the debt load of the business, just the interest alone they paid last year, excluding the quarterly report, it was about $1.2 billion. And if you just look at the adjusted EBITDA they're expecting for fiscal year 25, it's about $7 billion to $8.5 billion. So the interest on the debt is encroaching on their ability to pass on positive, net income to shareholders. They're still profitable. They're just facing some challenges in profit growth, and they continue to ratchet down the estimates for both earnings and even sales. Even before this quarter, they've already been moving it down. So the stock price, for shareholders who are bullish, unfortunately, is moving down because of, balance sheet issues, I would say inventory issues, pricing issues, and I think they're right. I think the market demand right now is really uncertain based on the prices of vehicles, and you have cost inputs may be challenged, particularly in Mexico, and auto parts that come from Canada. And then China, I think, is one of their markets is quite large in Europe as well, so they may end up facing some currency headwinds. So there's a lot of variables with Ford. And unfortunately for investors who own it, it's just been a long slog through the last few years of, like I said, that trading range between 14 and 9.
Yeah, and if there's an investor who wants to be in this space, GM has been a safer play than Ford, and it's been, more proven in that respect. So you're right, they have a lot of headwinds. They just called out those headwinds. Great insight, great breakdown of the earnings that we have hitting the tape after hours here, from Qualcomm to ARM to Ford. Thank you, George and Scott Durfey.